Over the past 8 years, I've immersed myself in the world of finance through my BSc Economics degree, my ACA accounting qualification, and my general career in financial reporting. And due to all of this, some of the most valuable skills I've learned are how to manage my finances, how to identify bad money habits, and how to invest in my future. So in this video, I'll be sharing the most 5 common bad money habits and how to overcome them. The first bad money habit is paying yourself last. Now, this is a concept that I learned from the popular book Rich Dad Poor Dad. In this book, Robert Kiyosaki explains that there are 2 types of people when it comes to paying bills: the poor habit and the rich habit. Now, the poor people habit is to pay themselves last. This means at the first of the month, they'll pay their bills. In the middle of the month, they might treat themselves, go to a bar, go to a restaurant, maybe get those new trainers that they wanted. And then at the end of the month, they'll see what they have left over and put that into savings or invest it. And 9 times out of 10, the balance left over is often 0. The rich people's habit, on the other hand, is to pay themselves first. This means as soon as they get their paycheck, they take at least 10% and just put it away straight away. That money doesn't even touch their bank account. It literally just comes in and comes out, and this forces the rich people to budget with what they have left over. By saving or investing that 10% as soon as you get it, it's essentially money which is out of sight and out of mind. The second bad money habit is just not knowing your income and expenses on a monthly basis. Until you have a clear understanding of your start point, it's difficult to know where you want to end up financially. Due to this, a common issue that most of us face is lifestyle inflation. This is where your salary slowly increases over time, but as a result of not tracking your spending, so do your expenses. So you really need to know how much you're spending on a monthly basis and really learn to separate what your assets are and what your liabilities are. Let me give you an example right now. If I asked you how much are your direct debits every month, would you be able to give me an answer? If I asked you what's the total debt among all your credit cards, would you have the answer? In addition, if someone said to you, how much are you worth? How many assets do you have to your name? Would you be able to answer that question? So really consider that right now. Could you answer any of those? Because if you can't, that is a bad money habit. As a result, you need to have a clear understanding of your financial situation. This will allow you to take account of what you currently have, take account of what you're earning monthly, and then understand how you can invest that towards your future to grow your wealth. The third bad money habit is not having an emergency fund. And this sort of links into bad money habit number 1. You need to learn to build a buffer, also known as an emergency fund. And this emergency fund should cover 3 to 6 months worth of your expenses. Having this buffer will provide you peace of mind, and it will also give you a safety net just in case of any future unknown or unpredictable expenses that you may have come at you. In addition, the emergency fund will also provide you with a pool of liquid cash just in case any unpredictable investments come at you in the future, because often the best investments come towards us when we just don't have that capital in our bank accounts. Now, to build your emergency fund, you just need to put a portion of your salary away every month, and you need to decide, do you want to have enough cash to cover maybe 3 months of expenses, 4, 5, 6, that's up to you. But once you've built that emergency fund, any surplus can then be used straight into investments to grow your wealth. The fourth bad money habit is expensive hobbies. And this comes down to the common phrase, keeping up with the Jonases, or in more modern times, keeping up with the Kardashians. Now, people often experience the pressure exerted on them by their friends and peers to keep up with society. And this often involves going to expensive restaurants, popping bottles at clubs, or maybe multiple luxury vacations. You need to learn to avoid these temptations. Now, this isn't me just saying to sit at home all day and do nothing with your life. Of course, you need to get out, you need to do stuff, that's what life is about. But try to swap expensive hobbies or expensive activities with cheaper alternatives. One example that has worked really well for me and my girlfriend is switching our Saturday date night, where we would go to an expensive restaurant, with Saturday hikes. All it cost us is petrol to get somewhere and a Tesco meal deal. And finally, bad money habit number 5 is not being proactive about keeping your finances in track. A lot of people wait until they're in financial trouble to start doing something about their financial situation. But the best way to avoid financial problems is to be financially proactive. Even if you're not experiencing any financial trouble right now, you should still be creating a budget, tracking your expenses, and investing every single month. Now, these 3 activities of budgeting, tracking, and investing may not sound like significant advice, and it may not make a significant dent to your finances on a month-by-month basis, but I promise you, once you compound that activity over the course of a year, 2 years, 5 years, 10 years, it will make a massive difference to your wealth. Money is like a snowball. If you push it down a mountain and nurture it, it will gain momentum and it will grow faster than you expected it to. That sums up the most 5 common bad money habits and how to overcome them. Remember, it's never too late to start when it comes to your financial journey, but equally, the earlier you start, the bigger benefits you will reap. If you enjoyed this video, make sure you give it a like and equally sub for more personal finance videos.